So this is our welcome webinar. I see we've got a couple of attendees logged in now. May have a few more join us. So first of all, I want to start by saying that I do have a hard stop today at 12:30, so I'll try and move through quickly and leave some time for questions. We do host these on an ongoing basis. I'm also hosting another webinar this afternoon on financial literacy with Intuit. If you want to know more about that, you can log in and access my Twitter account at @wallcpa, and you'll find links to the registration for that webinar. Now, bear with me 1 second, guys. Hello. I'm actually giving a webinar right now. No problem. Okay, bye. Sorry about that, guys. So I'm just wanted to get started with our welcome webinar, and hopefully everything will move slowly, or move well, not slowly. So obviously, I think most of you are clients, so you know a little bit about us. So I'm going to breeze through this really quickly. The different services that we provide. It's more than just accounting and bookkeeping. We do also offer some special services for you, including your own document management repository system. This is a really important tool that we will talk about, because this is where you can share and upload documents to our team in a secure fashion. While you are free to email us documents anytime that you'd like, email is an unsecure format, so we don't encourage that. On our website, there's the client zone link right at the top of the page where you can upload documents through a secure encrypted connection. If you don't have access to that right now and haven't received your client letter with your user ID and password, you should be able to actually go there, click client zone, and then when you get there to the main page, there'll be a reset my password, and you just put in your email address that we have on file. It should send you a new password. If that does not work for you, you can give our reception a call, and they'll be happy to make sure that you're set up properly. We also use Skype and GoToMeeting quite frequently. This is a big advantage for those of you who don't want to deal with the headaches of traffic in downtown Toronto or parking. It also gives us some flexibility to work odd hours, because for our account managers, they have the flexibility to be able to work home in the evenings as long as it suits their schedule. So if you're interested in later meetings, talk to your accountant manager and see if we can book a time that suits everyone's schedule. And again, Skype and GoToMeeting provide us the tools to be able to do that. We also have ongoing webinars like the one we have today. Today is a welcome webinar intended to guide you through our processes and our team to give you the next steps. But we have specific webinars, things like bookkeeping, things like cloud accounting, things like source deductions, all designed to give you more input about our services and the accounting process to help you be more informed and to help you reduce the amount of time that we spend on your file, because as a time and materials based firm, the more time we spend on the file, the higher your fees will be. So we're happy to do everything for you. We'll take a shoebox and start from scratch, but that will be the most cost intensive process. Whereas if you choose to use one of our bookkeeping tools, you can substantially reduce the amount of time we'll take and lower your costs accordingly. And we've got tools and webinars to help you learn and understand the different processes, whether that be using a spreadsheet to using online tools like QuickBooks Online or Xero. Our overall goal is to improve your business, and so it's all about understanding and collaborating to be more productive and proactive in our relationship with you. When it comes to taxes, the key is being proactive rather than reactive. There's not a lot we can do to help you in your business if you come to us 2 or 3 years after the fact. What we want to be doing is working with you on a regular basis, as proactive as we can, and planning for the future rather than reacting to the past. So I'd like to also introduce you to the team members that you'll be working with. So I'm here as the vice president of the organization, and then my father, who's the owner and business coach within the organization. And we also have Bob Novoslak, who is now financially free himself and only works 1 day a week, is available as a financial consultant. Now, my dad is a great resource for you and offers a Pyramid of Power coaching program that is completely free of charge. And what he does is he looks at where your business is now, where you want to take it, and how you're going to get there. And based on those conversations, we'll set a path for you. And that coaching If you were to go out and pay for, someone with my father's experience, you'd be paying thousands of dollars. And that's literally free for every single one of our clients. And it's tremendous value add. And I encourage every business owner to take advantage of it, even if you are just an independent consultant with no plans to grow beyond what you're doing now. It's still great to set goals and objectives even for your own individual organization, whether that's as simple as, what certifications are you going to take? What are you going to do to make sure that you're ready and prepared for your next contract at the end of this contract? So it's a great value add. And like I say, it's free of charge. Now, your individual account managers will either be Syed Raza or Sean Hope. For most of you, it will be Sean Hope. All new clients are generally going to Sean unless you're referred directly by Syed. Under Sean, we have two technicians, under both Syed and Sean, we have two account technicians, Satwinder and Michael. Again, generally speaking, most clients who work for Sean will be working with Michael Terminesi, and most people working with Syed will also be working with Satwinder Bahia. Now, there are exceptions to every rule, and one thing, the most important thing I'd like to give you guys as a tip moving forward is that always start at the bottom and escalate your issues up when necessary, because that'll reduce your overall bill. Of course, if you have questions and you want to go directly to your AM or your account manager, you're always free to, just recognizing that they are the more senior people, and of course, in conjunction, they have higher fees associated with that. So my dad's a free resource, so he's a great person to go to for business planning, high-level strategy. But when it comes to stuff that's specific to accounting and your file, you'll need to go to a team member. And the best team member to go through would be your staff accountant rather than your account manager. So I also want to talk to you guys about some important tax deadlines. Some of you may be familiar with these already, but if not, they're really important dates that I want you guys to set in stone. There's also a new app that I've recently become aware of. Haven't actually used it myself. I just literally heard about it last week by the CRA. It's a mobile app that you can download for iPhone or Android, and you can, sorry, bear with me a second again. Hi, Alexander, I'm doing a webinar right now. No problem. And on this app, you can put in your year-end date, and it will provide you a list of all the deadlines that you need to be aware of. But I'm going to give them to you today, just in case you don't have that app or don't want to download it. So first and foremost is your HST, your GST HST. So GST HST is due 3 months after your corporate year-end date. So your year-end date can be any date within 1 year and 1 week from the date you incorporate. Typically, we choose a month end for easier bookkeeping, and typically we go as far out as we possibly can. So, for example, if you were to incorporate today, we would probably be looking at a year end of October 31st, because a 1 year, 1 week wouldn't quite bring us to the end of November, so we'd go with an October 31st year end. And then as a result, since we have an October 31st year end, HST deadline would be the end of January. So it's 3 months after your year end date, whatever that might be. Now that is assuming that you're on an annual filing method, which is what we elect for most of our clients. We also elect the GST HST quick method, which is a different way of calculating the GST HST from the long method. The long method takes what you've collected and subtracts what you've paid on all the individual expense transactions. Problem with the long method is it's laborious, number one, and number two, for most service-based professionals, results in a higher HST payable to the government than using the quick method. The quick method is 7.8% of the first $30,000 in HST and 8.8% of everything above that. And that is basically assuming that 13% minus 7.8 or 13% minus 8.8 is what you've spent on HST. But the reality is, for most service-based professionals, you won't spend that much in GST HST. So it results in a much better strategy for you. The only exception to that is if you have an HST exempt service or you're working with an end client where HST is not applicable. For example, a US client, because with GST HST, it's charged based on where the benefit of the service resides. So if you're working out of Canada with a US end client, you wouldn't need to charge GST HST. Next deadline to discuss is your corporate tax. Now, you'll see that there's 2 dates on here, 3 months and 6 months. The reason that is because 3 months after your year end is your payment deadline, after which you begin to accrue interest. But your filing deadline isn't until 6 months after your year end. And 6 months after your year end, if you haven't filed and you haven't paid, in addition to the interest you've accrued from the after the end of the first 3 months, you'll now be accrued a penalty. So the interest is quite reasonable, but the penalties become much steeper. But in either case, both are a percentage of what's outstanding. So if you've paid all your outstanding taxes, in fact, these deadlines aren't truly filing deadlines at all. They're really payment deadlines. The other thing we want to talk about are source deductions. Source deductions are the taxes that are deducted at source from your employee's paycheck and remitted to the government on behalf of the employer, or on behalf of the employee by the employer. As a small business owner, usually the only employees are yourself, potentially your family members. And for most of our clients, we don't make monthly source deduction remittances. What we do for most of our clients is we will elect to pay source deductions, or pay the employee once a year and pay source deductions once a year. The reason we do that is that gives us access to more information about your business before we're making the final decision. Now, CRA is, if they consider your money that you've taken out of the business to be salary, they will come back and say you should have paid source deductions. However, the money you take out of your business we consider to be a loan from your business to you, the business owner, so that you can pay for expenses on behalf of the business. Now, what this does is it gives you access to the time value of money, defers when you pay your taxes, and allows you to have full control when you do your tax planning to determine a salary that is based on how much money that you've actually taken out of the corporation rather than how much you plan to take out of the corporation. Now, whatever payment method you choose, you're going to have a source deduction deadline of either the 7th month after your year end or January the 10th, sort of whichever comes first. And even the 10th day, this is not a date that's set in stone. It's determined by your average withholding amount for source deductions, your average monthly withholding amount. Now, there are different thresholds that could either be the 3rd, the 10th, or the 15th of the 7th or 10th month. I've put the 10th here because that is the most common method used by our clients. It's very rare that you would go to the 3rd. You'd have to have extremely high average monthly withholding amounts in order to do that. And we do have a source deduction webinar that will be coming up in November and December to talk specifically about the different deadlines and the different thresholds that are available for source deductions. But if you're new to business and this is your first year in operation, if you want to declare a salary for the 2015 year, the latest day in the year that that salary could be declared is December the 10th, in which case you'd need to be making your source deduction remittance by January the 10th. So this is something that you need to be thinking about now. We've sent out some emails about the source deductions, and we will be hosting source deduction webinars in the upcoming months for those clients who are not familiar with the process. Now, to give you an idea of how our process works, it normally takes us about 6 to 8 weeks to complete a file. Sometimes we can do it faster, and sometimes it takes longer depending upon whether we have issues that we have to go back and forth with the client, for example, not getting all the information necessary to process the return. But on average, it takes us between 6 to 8 weeks to process. And our process, basically, we have a login where we bring in the file, do the initial data entry, review the initial data entry, and schedule a meeting with the client. During that meeting with the client, we'll review the numbers with you, go through the tax planning for the year, do a little bit of post-review data entry. So out of the meeting will come some adjustments that we need to make. We'll do a final check on that to make sure that that meets all the requirements of the Institute as well as CRA. And then finally, we will release the package and e-file the documents on your behalf. So that's generally speaking our process, and it normally takes between 6 to 8 weeks. As I've mentioned before, the key to maximizing benefits of your small business is to be proactive. One of the major benefits of a small business is the ability to leave money inside of the corporation. But if you're pulling the money out of the corporation, that really limits us as far as what we can do with your tax planning. So the more you take out of your corporation, the more you're going to take in the way of salary, and the more that you will pay in taxes, because once you're over $43,000 in personal income, you're going to be paying a higher tax rate personally than you would inside the corporation. And we want to be able to work with you and do tax planning to make sure that everything is being structured as effectively as possible. And in order to do that, we need to be proactive and doing the planning for the future years rather than reacting to the past years. So no matter what bookkeeping system that you choose to use, there's a couple of things that you'll need to do, which is to develop a good system, make sure you keep your records organized, and remember to keep all your old invoices and receipts. And one important thing to note about invoices and receipts is that your bank statements and credit cards are not considered valid source documents. What CRA is looking for is the original invoices from the vendor or the purchase invoices. So if you go to, let's say Canadian Tire, pick up some automobile supplies, they'll need to have the individual receipt for that. The reason that they do want the individual receipt is because a bank statement doesn't provide line item detail. And as you can imagine, if you went to Canadian Tire or you went to Walmart or you went to the Bay, you could be buying things for a myriad of different things, from personal to a whole bunch of different business type of accounts. So it's important to keep a receipt for everything that you do. I'm a huge fan of the cloud, as you guys will learn, and I believe that the best system that you guys can use is a web-based cloud system, because it's going to substantially reduce the amount of time that you spend doing your data entry, because the system will link to your bank statements, pull in live feeds, and allow you to set bank rules to automatically classify those transactions. So I'm a huge proponent of that, but of course, if you want to use an Excel spreadsheet, we do have a custom one for our clients called our CRED manual, which stands for Capturing Revenue and Expense Data. And we have a whole webinar dedicated to that. And we'll also even support clients who choose to use traditional desktop software like Simply Accounting, QuickBooks Desktop, or any of those other products. So no matter what you're using, you want to make sure that you're maximizing your deductions. One of the key things that we want to make sure that you're aware of is that unless an item is specifically disallowed, it's really open to a lot of interpretation. And the Income Tax Act basically says it has to be incurred with the intent to earn income in the future, and it must be reasonable. That's really subjective, and it's open to a lot of interpretation. And what we try to encourage our clients to do is push the envelope as much as you can without, crossing the line. And one of the things we'll do with you is do a benchmarking analysis to show you how you compare against the average and the median, which will help us pinpoint areas where you may have missed out on deductions that you're entitled to. And one of the key tips that I would leave you with is, if you're not sure what to do with an expense category, put it under the Ask My Accountant category so that we can review it with you at the end of the year. Because I'd much rather see you put expenses in that I, as your accountant, need to remove than for me to have to sit down with you at the end of the year and put in expenses that you hadn't thought of. Because let me give you two examples of two different companies with very similar expenses. In one situation, you have a client who's come in and been overly zealous in their deductions, and we run our benchmarking analysis and find a few categories where we think there's items that probably we shouldn't deduct, so we remove those. On the other guy who's got a very similar situation, he's been really conservative and left out a lot of things, and during our review meeting, we identify a number of items that he could deduct, and we make an adjustment and put those into the file. Now, if an auditor comes in and reviews the file, the more aggressive client will have all these adjusting journal entries, removing transactions, making him appear to be more conservative. Whereas the guy who came in with less expenses is going to have all these adjusting entries where we've added in expenses, making him look more aggressive. And even if they come to the exact same number at the end of the day, it's all about optics. And the person who's had the items removed is going to have the impression of being more conservative, even if they end up at the exact same number. So we want to encourage you to deduct everything you possibly are entitled to, and if you're unsure, put it through the Ask My Accountant category so we can review that with you at the end of the year. The reason that most people miss out on all the deductions they're entitled to is really three reasons. They have a lack of knowledge of what they can deduct, they've done poor record keeping, or they're afraid of Revenue Canada. So the tools we employ to reduce those risks is using online bookkeeping tools like Xero and QuickBooks Online to help reduce the amount of time and ensure that all your information is being tracked and processed. We also do a benchmarking analysis to identify areas where you're above the average and potentially at risk for being overly aggressive, and also when you're below the average, to identify areas where you may have missed out on deductions that you're legitimately entitled to. Finally, we top this all off with our audit representation protection. So if the CRA ever comes knocking at your door, you know you have a professional there to represent you and defend you all up into the final stages of appeals. And the way the process works is you're allowed 3 levels of appeals within CRA, and typically as you go up each level of appeal, you're getting a more senior, more experienced professional who is usually more informed on the more aggressive strategies, whereas at the junior level, they're basically taught that when in doubt, disallow the expense. So we're here to help you and protect you up until the third and final stages of appeals, which is as far as your accountant can go for you. We do have some information here on the CRA PSB risk. This is actually almost becoming a little outdated now. What the CRA PSB risk is the risk that as an independent contractor, you're deemed to be an employee of your end client rather than a true independent contractor. And there was a special case that went on, we're going back about 3 years now, where 234 small businesses were audited nationally, 96 of them were found to be PSCs, and of those 44 were in the IT section. Of those 44, through the National Association of Computer Consulting Businesses, we helped to defend over 22 of these cases and fought and won every single one of those cases. Many of them were tossed out before ever going to tax court. A few of them didn't go to tax court and were fought and won even at the first level of tax court, which is great. And it's a great precedence to be created for us and for the industry. And as a result of all that hard work, there's even been a new information bulletin put out by CRA, which is basically saying that the IT industry is effectively exempt from PSB, PSC. CRA will never go so far as to say an industry or an individual is exempt. They will always say every situation is judged on its own merits. But what they basically indicated in this information bulletin is a lack of intent at a federal level to go after the independent or the IT consulting industry in regards to PSB, PSC risk. So that's a slam dunk win. For those of you who are concerned about it, we do have a number of layers of protection that we provide to our clients. Starting at the furthest ring, we've got a sample response to the CRA questionnaire that sort of triggered that special audit. We also have a 76-page proprietary document that outlines all the historic tax law and case law when it comes to PSB, PSC, and identifies why our clients are not PSBs and why they are true independent contractors. And then, of course, at the core, we've got our unique audit representation protection, which is there for us to help and defend you up until the third and final stages of appeals. Now we're just getting to some of the core stuff about how we add value. So audit insurance, benchmark analysis, strategic planning, financial quarterbacking, business coaching, the various seminars that we offer in the financial planning. There's a number of ways that we believe we add value more than just doing your books. I believe that over the years you will come to see the value of all these individual tools. If this is your first year, obviously, with us, you don't have much experience with these tools and the value that they bring. But I can tell you that many of these are worth their weight in gold. And the culmination of all of these give us a really compelling service level that's hard to beat within this industry. So basically that's that's our welcome webinar. I am going to open it up for a few minutes to Q&A for either of you that have any questions. So let me make sure that I'm getting my chat windows open. And of course, if you want to talk, feel free to ask a question out loud. Any questions from anyone online? Excellent. I guess we'll conclude this meeting, and I do want to, oh, there you go, you have a question. I see a yes anyway, so feel free to, you said that if I have doubts about an account, I should put it under ask my accountant. But let's say we have a couple of questions about bookkeeping, which account to use for a specific transaction. If I email my accountant with a question like it, how much would it cost? So obviously start with I would recommend starting with your staff accountant rather than the account manager on a question like that. And in fact, you can even probably look at our sample FAQs is a great way to start. The individual staff accountant will charge you for the amount of time it takes to answer the question. So if it's very quick question, what does this go to? It's probably going to be built in at 6 minutes because 6 minutes is the smallest increment that we have in the time and billing software. I'm just going to do a quick calculation to figure out how much that would be. So it's going to be probably about $6, I would guess, for a question along those lines. If it's quick and simple, less than 6 minutes to answer. Of course, there's a number of free resources that you can come to. You can come to our bookkeeping webinars where you can get those questions answered free of charge. And that way you can get all these questions answered without having to do that. And again, with your welcome package, originally when you signed up with us, you should have received a document entitled Expenses, which, while not an exhaustive list, does give you an idea of the categories that we have and what types of things should go into the different categories that we track. So hopefully that answers your questions. If you do have any others, please let me know. No problem. Glad I could help, Daniel. So it looks like that's the last question for today. And again, thank you guys for dialing in. Appreciate you taking the time with me. If you do have any other questions, feel free to shoot us an email, customerservice@ca4it.com, or give us a call at 1-800-465-7532. So pleasure chatting with you, and have a great day. Bye for now.